I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic Engineer Gold Mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Drew Zimmerman. He's a portfolio manager at PI Financial in Vancouver. His website, pifinancial.com. You can also find him at polarfuturesgroup.com. Welcome back to the show, Drew.
Thanks for having me on, Jim.
Well, the Bank of Canada dominated the time on business television this morning, telling us that their official interest rate was going up 0.25%. Is that a big deal, or had the market already taken that into account?
Yes, that's right, Jim. We did raise rates by 0.25% this morning, but as you alluded to, it was largely priced into the market. The market had expected that to, 90% or so. So largely priced in, and I think that's why when we saw the release come out this morning, the Canadian dollar jumped around, as it always does on these releases, was lower initially and then kind of gradually came back through the day. But again, for a fairly big event, like an interest rate change or increase, the Canadian dollar is largely unchanged, and you can attribute a lot of that to the fact that the market had been expecting it, had priced it in. But it was interesting to see that the Canadian dollar or the Bank of Canada 2-year yields were largely flat on the day. So to me, that says even though we got a rate hike in the front month, the forward rate hikes that we were expecting, or the market had been expecting, didn't get any more priced in. So there was a dovishness in the statement that the Bank of Canada released that stopped the market from pricing in more rate hikes as we go through the rest of this year.
Now, last fall, when they unexpectedly boosted rates by 0.25%, the Canadian dollar really jumped. Why didn't it this time?
Again, it's with currencies, it's always relative. It's relative to another currency. So Canada, we always see it relative to the U.S. and relative to expectations. And just having the market have been so prepared, given the last two employment reports are really what did it, both very strong, which got the market to be in a situation where it was expected that the Bank of Canada was going to raise rates. So once they did it, that was just sort of, check the box, move on. The currency doesn't really need to reprice. We've already done that over the past several weeks with a 3-cent rally in the Canadian dollar. So today's fluctuations were more limited because, again, it had been expected.
RBC jumped the gun on the rate hike. It boosted mortgage rates last week. Of course, the Bank of Canada isn't owned by Canadians. It's run by the biggest banks in the country with a federally appointed chair. Does this not mean that really what the Bank of Canada does, the big banks have already planned?
The banks can move rates when they want to. They move their rates to stay competitive. If one goes down, the others tend to follow. They're all going after the same business. So when you do see a bank like RBC move in front of a rate hike, they are expecting rates to go higher, and when we have these rates moving higher, it tends to mean better business for the banks. They can get back to a higher spread between what they lend out at and what they have to pay on the overnight market. So because the overnight rate or the bank rate is going up 25 basis points, usually means that the amount they're going to charge you on a line of credit or a mortgage will go up more than 25 basis points. So they I don't want to say dictate by any means what the Bank of Canada is going to do, but they will run their business to the best of their abilities, and for them, making money is what they're there to do. And if they can get a better spread before the Bank of Canada even moves, they're going to take steps to do that.
Any chance that they're going to boost the interest you get in your savings account?
That does seem to be a little stickier. I would expect it will come up through this year. We are expecting more rate hikes through 2018, although they will likely be on pause for a little bit now, given the statement that we saw. But again, coming back to the banks making a bigger spread, they tend to be sticky on raising the rates that they will pay to you, but the rates that they charge you tend to move quickly, or as you just pointed out, before the actual overnight rates move. And my analogy to that always goes back to the gas pump. When the price of oil shoots up, our price of gas jumps up, and everybody attributes it to the big jump in oil price. However, when oil prices come down, we never see the gas price come down at the pump. So prices are always stickier when the companies that are dealing in that spread can, make more money when the spread moves in their favor, and they'll be slower to move the side of the equation that hurts them.
So given the interest rate differential with the U.S., would you expect the Canadian dollar to move lower?
Well, that's what I found very interesting today, was we had interest rates moving higher in the U.S. today, and even with a rate hike in Canada, our 2-year yield, for example, was quite flat. I've tracked the 2-year yield differential between Canada and the United States as a key driver of our currency, and it's really diverged over the last several weeks, really since the holiday season. I think the interest rate differential has been moving back lower, so you get paid more on a U.S. 2-year bond than you will on a Canadian 2-year bond, about 27, 28 basis points right now. And that tends to drive more U.S. dollar strength than Canadian dollar strength. So I am looking for the interest rate differential to pull Canada back lower, especially because we didn't see a tick up in rates today, which would have been, a very easy environment for our yields to be moving higher today. But again, that's not going to be the only driver of the Canadian dollar. I mean, oil tends to be a very important factor in where the Canadian dollar is going, and the correlation hasn't been as tight over the last several months as it has been in years past. But again, we've had almost I wouldn't say an unreported issue with the crude price, but maybe lesser known is the fact that our Canadian oil is traded on a benchmark called the Western Canada Select, and that's trading at about a $25 discount to WTI. So even though we see WTI prices up at about $64 a barrel, the impact of that rising oil price that it would normally have on the Canadian dollar is numbed by the fact that we've got that big discount. So we're exporting our crude still at $40 instead of $64. So not as much of a impactful lift on the Canadian dollar that you would think you would see. And then most recently, what's been hugely important and really, I think, the big mover since the start of the holiday season has been the weakness in the U.S. dollar. And that U.S. dollar weakness has just really allowed Canada, even with interest rate differentials, I think, weighing on Canada, has really allowed Canada to do better and been a big part of the last 3-cent move higher that we've seen in the Canadian dollar.
We'll have more with Drew Zimmerman right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, apart from the factors affecting the Canadian dollar, what other opportunities do you see or risks?
Well, with those other factors outside of the interest rate differentials, I think there's positioning risk in both of those markets, and by both of those markets, I mean the crude oil market and the U.S. dollar strength or weakness. The positioning in crude oil, that's the speculative positioning, people betting on the price of crude oil, has never been higher than it is right now. So over the last several months, as crude oil rallied from $42 in June up to $65 just recently, speculators have been getting longer and longer and longer to the tune that they've never been before. It's the biggest ever position. And when sentiment gets so extreme and positioning gets so large, you can see sharper breaks when a price change or direction change does happen. So if we were to see crude start to sell off, and it could be based on any number of reasons why, but now you've got all these speculative long positions that all of a sudden want to start taking profit or getting out of their position sooner than later if they're taking on losses. So you can see a wave of strong selling when you see these record positioning sizes. And the other instrument, the dollar index, which is largely based on the euro, also has all-time record positioning in it. So as the euros rallied, I mean, we all know the dollar index was soft throughout the entire year, and as I just mentioned, very soft through the holiday season and the start of this year. Speculators there have stepped up in a record size to be long of the euro and short of the dollar. So there's record positioning in both of those key components that I would say are two of the three key drivers in the Canadian dollar. So if we were to see a price change in the euro or a price change in the crude oil market, we could see a wall of selling really come into those markets that would see quite sharp price action. And again, as that pertains back to the Canadian dollar being two of the key three drivers, I think that could give us some Canadian dollar weakness that would match more what we're seeing in the interest rate differential space. So I'm cautious now. These markets do tend to extend more than you think they might when they're running like this and when positioning and momentum gets behind them. However, again, the positioning risk that I watch when it does get to record levels, you do tend to see sharp turns and a very big amount of selling that comes in very quickly, and you get sharp price action.
We'll have more with Drew Zimmerman right after this.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Drew Zimmerman. Drew, they held the Vancouver Korea Summit with 20 foreign ministers from around the world participating. However, they missed the three most important, probably, North Korea itself, China, and Russia. But the talk from around the table seemed to be very tough. If there's a conflict in Korea, what's that going to do to the price of crude?
I don't know that it would necessarily affect the price of crude directly. North Korea is not going to be a bigger or an exporter of crude at all, and is not supposed to be an importer of crude given the sanctions, although we've seen some Chinese exports to North Korea still going on. But it would more be a global tension. So I think you'd be more likely to see price adversity in gold than you would in the price of crude. Crude will definitely pick up a geopolitical risk when we've got tensions in the Middle East picking up. But as far as the Asian crisis or North Korean issue, I don't think it would really impact the price of oil to any discernible fact unless things were to really escalate between sort of bigger players in that space.
Now, what about gold when things get testy?
That's right. I think we've seen that before when we were on missile launch sort of countdown or waiting through last summer when we last saw gold around these levels or a little higher when we were at 1360. As that dissipates, we saw gold sell off. I think gold has had a tremendous run in the last month and a half, as we ran up just over $100 after breaking down some key support levels of 1250. So I think there's been maybe a touch of geopolitical risk in the price of gold, but I think again it's been more a weak U.S. dollar story. If I look at the price action over the last month and again through that holiday season and the start of this year, it's been more the reciprocal of the U.S. dollar. I really look at gold against real rates. When real rates are moving higher, gold tends to do worse, and that's what we've seen right now. We've seen real rates moving higher as interest rates have been moving higher without that inflation move to knock them back down again. So I think gold is a little overextended, given that the geopolitical situation has maybe tamed itself. I mean, we just heard news today that North and South Korea will march together under one flag at the upcoming Winter Olympics that are about to start. The Olympics being so close to the North Korea-South Korea border may be a good time if we can get through the Olympics without any big event to really cement maybe a turning point in what's been a very testy relationship between North Korea and the rest of the world. So again, if we've got diminishing geopolitical risk, real rates moving higher, that should be a weight on gold. And if the U.S. dollar stabilizes and or bounces back from these levels, I think it's been that weak U.S. dollar that's allowed gold to run. Then I think we can see some pressure or a weight being put on gold, and I'm looking for a sell-off from these levels. And again, that's a shorter term view. You always have to sync up your analysis with what you're trying to trade. And then I do see a stage where inflation does come back, and it will be faster than what the Fed's doing. And in that sort of inflation environment, I think we can really see the precious metals market do quite well over a sustained period. What I'm looking for now in the coming month or two is to see, with this downward pressure on gold, where does it hold up? So I'll be watching different levels, but looking for the near-term move to be on the softer side for gold.
Bitcoin has taken a pounding with a huge drop. What do you see happening in that space?
I mean, that's a very tough space to trade or to rationalize. I mean, I've been watching it since it's been a futures contract, given that I'm a futures broker. So we came to trading on the CME almost a month ago to the day. And since then, I mean, it's fallen in half. I don't know if the CME futures contract was the kiss of death for Bitcoin. I'm not saying that it's going to go to zero. I'm not 100% sure what the underlying value or asset is. I'm not in that space enough to understand that, but looking at the chart action that we've seen, the initial break once it started to trade, it gathered itself around the $14,000-$15,000 level, and then having a hard break the last 2 days, getting under $10,000 today, back up above that a bit now. But it's a very volatile asset. I would treat it just like I treat any other commodity. You have to be trading it with a thought of where you're going to get in, where you're going to get out. And given the level of volatility that it has, it can be a great trader's market. Again, I don't know that it's an asset that I would look to invest in over an extended period of time. When you see the volatility that it does have, that definitely scares a few people away. I mean, falling in half over the last month has been a stark reminder of that, and that's just been since the futures have been trading. So obviously the big run up was before the futures started trading, but it is a very volatile asset class right now. I would say, be extremely cautious, use as little leverage or exposure as you can to a level where you're comfortable with, moves where you can see the value fall in half. I mean, it could very easily fall in half again, or it could double again, and we'd be back at 20,000. So it's what I would say is a young man's trading market, but you've got to be careful with the amount of risk that you're taking there.
Well, apparently MasterCard won't let you buy Bitcoin with it.
Yeah, I mean, we've seen, again, just to come back to the futures instrument, because that's what I know, we've seen a lot of the dealers or the futures clearing merchants, the FCMs that we deal with, really restrict the amount of trading that can happen, the type of people that are allowed to have accounts. They want them to be very well funded. And you see that through the U.S. as well, not allowing some clients to trade in Bitcoin-related assets. So there's definitely a burden of protection, I think, on some of these corporations that, while right now we just view it as restrictive and unfair, if it turns out that, tomorrow or the next day Bitcoin's down in half again, then there would be some blowback, I think, on these companies from the general public saying, why didn't you do more to protect the general consumer from taking this on? And especially things like MasterCard, where people are taking on debt, and the last thing they want is people taking on debt to speculate in something like Bitcoin.
Yeah, and would MasterCard take Bitcoin to pay off their debt?
Well, it'd be tough to give them something that then falls in half. I don't think they'd be too happy with that payment.
Drew, thank you so much for chatting with us.
Thanks for having me on today, Jim.
My guest has been Drew Zimmerman, Portfolio Manager at PI Financial in Vancouver. His websites pifinancial.com and polarfuturesgroup.com. You're listening to HoweStreet.com radio. Find us on Twitter at HoweStreet. If you have any questions for the show or our guests, you can send them to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of Howe Street Media Incorporated.